Let's talk about psychology today, guys. We're discussing a bear market overall and going to give you a little bit of help when it comes to some of the stress that can be involved in trading on an intraday short-term basis during a market crash or a market that is moving to the downside. As we've had over the past couple of weeks, things have changed. And guys, we got to be prepared for it.
Yeah, absolutely. And look, one of the things you got to consider in a bear market is we actually had like the biggest recovery day the other day in the overall market. And it was an unbelievable move from bottom to top, right? So you're going to get extra volatility. Your best bounce days come in bear markets when the market is pulling back. That's the first thing. So you've got to anticipate that that's going to be true. And one thing that makes a lot of sense, especially trading at the open, is sizing down. I think that's a good trick because it allows you to hold moves longer for bigger growth and bigger volatility without actually taking a bigger P&L hit if you have to do so. The other thing that I think makes sense to do, and I'm going to pick on a few names here, and one in particular, something like Lemonade by pulling up a daily chart, is when you're thinking about the long term. Sometimes you've just got to ignore some of these charts that you're looking at. I'm talking about especially beat up names and worrying about where a stock has come from. Do not get anchored. When you're making decisions on names that you either are interested in dip buying, you're thinking about cutting bait on, you're figuring your next move, do I hold it, do I sell it, am I a buyer? You've got to ignore where you got into it. You've got to ignore where the stock has come from a lot of times, unless it's key support and resistance, and you've got to hone in on the decisions you're making. Do you have a stop? Is there a cutting point that you have? Is there something you're looking for in earnings? There's a key level on the market that you want to look for that's going to get you out of it. And then at that point, you move on from there. If you worry about the fact that, oh my goodness, this was at 180, it's got so much to go. That doesn't matter. That's all irrelevant. It was at $100. It could go 3x and still be only halfway towards it. Forget about that in a bear market. You've got to decide what is your out, what is your catalyst. Is there something technically or fundamentally you're looking for? Is there a metric? If in the case of Lemonade, is it going to be an improvement in the loss ratio and you're holding until their next quarter? You've got to do that. Do not get anchored to the prices you own things at or where they have come from those previous highs in the past. Those only matter as support and resistance for individual trades. And I think a lot of times we can get clouded by that. Anchoring, it's real in negotiations. It's also in decision making. It can be a huge problem. So you want to avoid that as much as you can.
All right, so I'll go with tip number 2 right now. And how about that's just trade the news? Like every single day, you're going to be able to find opportunities in the market, right? And if you're going to be a day trader, you're not having to be stuck with one particular name or one sector, or just look for something that has some green shoots. It could either be a short sell that you really like or a long that we really like. And I think today's is a perfect example. We wrote it down real early today off the sticky note. It was on our watch list on TraderTV.Live, at TraderTV.Sean on the sticky note right here. We talked about IBM as I pull it up right now. Look, this was an idea we had today. We liked the long through 131. They had a great quarter, right? So we ignore the fact that the market is in this bear territory, right? And bear, right? Now get out of here. IBM doesn't want to see no bear. So we look at it and we say, hey, what is the strategy going to be on this name? We liked the quarter. We liked everything about it. So we kind of just stick with the plan. And I think that's my tip. Stick with your plan. Understand what stocks have which kind of directional move to it, and then just play it. Play it as normal. But do not get caught up in multiple names because you have FOMO. Stick to your plan. Find an idea that you like and trade that idea. Just because the NASDAQ is tanking doesn't mean you need to go over and trade Apple, trade Facebook, trade Microsoft. Stick with what's been working for you. Look at the news and find some key ideas that you can put forward in different names. They change every single day. There's always a bull market and there's always a bear market if you look for individual names.
I love that concept, and I'm going to lean on that a little bit here, Sean. Somebody actually asked me on Twitter the other day what I was doing because the market had changed once again. And I simply explained, you have to go back to what you do best. And you have to understand, first of all, what you do best, and then just simplify. If that means you're doing one thing and one thing only, just do that one thing. as Sean said, don't feel like you have to do 100 different things all in the same time, in the same day, in the same trade even. Just simplify, guys, and make it a lot more calm as you're trading during a market pullback. Hope that helps. A few tips on how to trade during a bear market.